With inflation concerns on the rise, what does it mean for the economy moving forward?
Absolutely. We're covering everything from potential housing crashes to the impacts of the U.S. elections.
This is Financial Insights in Minutes, your go-to source for crucial financial education.
Let's jump right into today's key summaries from top financial experts.
Buckle up, folks. We're diving into the latest from the Eurodollar University, where the spotlight is on the Fed's recent speech at Jackson Hole. What did Federal Reserve Chairman Jay Powell really mean when he talked about conquering inflation?
Let's get straight to the facts. Powell's speech had all the makings of a sales pitch, but is that what the economy needs right now? This is where things get interesting. Stay tuned.
So, what's the central theme here? What's Powell really saying about the economy?
The crux of Powell's message is essentially, we've conquered inflation, but brace yourselves for the unemployment monster. It's a tightrope walk between optimism and a warning sign.
Let's navigate these tricky waters. What about the shift in Powell's tone?
His approach was notably aggressive, suggesting confidence but wrapped in a cautious delivery. Powell hinted at possible rate cuts, even as he proclaimed victory over inflation.
What's the scoop on the unemployment situation?
Key indicators show that while inflation is contained, the labor market is signaling trouble ahead. Rate cuts could see little effect on unemployment. This might be a storm on the horizon.
Okay, let's talk about market reactions. What are we seeing there?
The market is bracing for aggressive rate cuts as Powell lays the groundwork for potential economic shifts. Investor confidence? Let's just say it's walking a tightrope.
Looking ahead, what are the major predictions from this speech?
Expect rate cuts soon. The Fed may have no choice but to act as economic conditions worsen. Inflation might feel like a thing of the past, but don't be fooled. Problems may lurk around the corner.
And what about consumer confidence?
With volatility in the air, consumer confidence could take a hit. If Powell can't sway public perception, we might be in for a bumpy ride ahead.
Wrapping this up, what are the key takeaways from today's discussion?
In short, the Fed's claims of inflation victory highlight a new strategy that may not sufficiently address the looming unemployment crisis. It leaves us wondering, how will this play out in the coming months?
As we close, it's time to reflect on this. Is the Fed's confidence really justified? What do you think?
Let us know in the comments. This train is just getting started, and we want your insights on where the economy is heading.
Welcome to David Lin's channel on YouTube. Today, we're diving into the turbulent waters of investment risk with our esteemed guest, Dr. William Bernstein, a veteran in finance and economics.
Absolutely. Dr. Bernstein brings invaluable insights from his extensive background as a financial theorist and economic historian. Get ready for an eye-opening discussion.
So, what's the central thesis of Dr. Bernstein's talk?
Dr. Bernstein argues that extreme risks, like inflation and even nuclear devastation, are genuine threats investors must prepare for. He emphasizes the need for a long-term perspective in navigating these financial dangers.
Let's break down those key risks, starting with inflation. What's the scoop?
Dr. Bernstein identifies inflation as the most critical economic risk. It's pervasive, and nations rarely avoid it. Protecting against this is crucial for investors.
What about deflation? Is it a looming threat?
Deflation, while generally short-lived, can be worrisome. Bernstein indicates that central banks are typically effective in managing it during crises. It's a cycle worth monitoring.
Now, confiscation sounds alarming. What's the deal there?
Bernstein warns that governments have a history of confiscating assets. Modern investors must stay vigilant in light of potential policy changes that could threaten personal wealth.
Lastly, let's touch on devastation risks, like nuclear threats.
Exactly. Bernstein emphasizes that such unpredictable events can strike fear into markets, leading to severe financial consequences. It's a risk no one should dismiss.
Time for predictions. What does Dr. Bernstein foresee?
He posits a 10 to 20% risk of hyperinflation over the next few years, which makes it essential for investors to hedge against such drastic changes.
What about the potential for overall economic unraveling?
Bernstein warns that rising government debt, combined with high servicing costs, could cause markets to spiral out of control, leading to severe economic issues.
So, to wrap it all up, what are the main takeaways?
Investors are called to adopt a proactive stance against inflation, deflation, and confiscation. With looming global risks, A long-term strategy is crucial for financial success.
What's the best way forward for investors?
Knowledge is power. By staying informed about all these risks, investors can better protect their assets against unexpected market shifts.
Before we go, we want to hear from you. What strategies will you use to safeguard your investments?
Comment below with your thoughts, and let's keep the conversation going about how to navigate these financial waters.
Good morning, traders. Welcome to the Technical Traders. Today, we're diving into the intriguing world of stocks and gold. What trends are dominating the markets? What signals should every trader watch out for?
That's right. Craig Hemke shares his insights on the recent market trends and what they might mean for your investments. Stay tuned as we navigate these currents with clarity.
Now, what's the core thesis behind Craig's analysis?
The main takeaway is that while stock markets are seeing heightened volatility, the outlook for gold suggests a bullish trend. Traders should stay alert for sudden shifts.
Let's dissect the key points Craig highlighted. First up, stock market volatility.
Absolutely. The S&P 500 futures are exhibiting notable volatility, with overbought conditions raising some eyebrows among traders.
And how about the Fed's role here? What did Craig say?
He noted that the Fed's recent remarks have added uncertainty to the markets, emphasizing gradual interest rate changes rather than drastic movements.
And what about gold? It seems to be catching some investors' attention.
Definitely. Gold is forming a promising bull flag pattern, indicating that we might see it hit new highs soon, particularly in the 1650 to 1750 range.
Now, small caps seem to be in the spotlight as well. What's happening there?
Great observation. Small cap stocks, particularly regional banks, have surged, reflecting a risk-on sentiment among investors.
Wrapping up key points, let's talk about sector movements.
Home builders are seeing substantial gains as investors flock to real estate, viewing it as a more stable investment amid market volatility.
Now, let's touch on Craig's predictions. What does he foresee?
He predicts continued market volatility, driven by the Fed's actions, along with potential pullbacks as the market digests recent developments.
And what about gold?
The prediction is bullish for gold, as it may break through key resistance levels, supported by strong technical indicators pointing to a significant uptrend.
As we wrap up, what are the big takeaways?
In summary, traders should prepare for sustained volatility while keeping an eye on emerging trends in gold and small caps. The markets are ever-changing.
So what's your take on the current market conditions?
Drop your thoughts in the comments. How do you navigate the shifting tides of the stock and gold markets?
Welcome to MHFIN. Today we're diving into the turbulent waters of the Airbnb market. Are we on the brink of a housing crash? Buckle up, folks.
Indeed. With recent market trends suggesting potential turbulence for Airbnb investors, it's more than just speculation. Let's get straight to the facts.
So what's the central theme here? Why is everybody buzzing about a potential Airbnb crash?
The core thesis proposes that declining revenues, increasing regulations, and a softening consumer spend could spell disaster for Airbnb investors. Sounds dire, right?
Let's navigate through those key points. What do the revenue trends show?
Rental revenues are plummeting. Austin and Phoenix have seen staggering drops of nearly 47% in revenue, a clear red flag.
And how does market saturation play into this?
With over 1 million short-term rentals competing against roughly 500,000 homes, we're facing a saturated market poised for a serious downturn.
What are investors feeling about the market?
There's palpable anxiety out there. Investors are increasingly worried about recession risks, influencing stock dips like we saw with Airbnb's plummet of 14%.
How do economic factors reflect on these trends?
Consumer spending, which holds up to 70% of GDP, is crucial. Inflation is squeezing that disposable income, leading to reduced bookings.
Looking ahead, what could unfold in the market?
The oversupply could spell disaster. If inventory levels spike, we could see a desperate sell-off, driving prices into a tailspin.
What about the potential for recession?
We're already seeing signs. Unemployment has crept up, foreshadowing economic stress. Consumer confidence may take a further hit.
To wrap it up, what are the key takeaways from the discussion?
Airbnb is at a crossroads, with market dynamics suggesting possible shifts and economic challenges looming on the horizon. Investors must stay sharp.
We want to hear from you. If the housing market changes, how will you adapt?
Drop your thoughts in the comments below. Your insights could shape the conversation on navigating these turbulent waters.
Welcome back to Blockworks Macro. Today, we're diving into the deep seas of the global economy with insights from Michael Drury, chief economist at MHFIN Trading. Get ready to unravel the ways China's economic challenges ripple through the rest of the world.
Absolutely. Michael brings a wealth of knowledge regarding the intersection of America and China's economies, and he's not shying away from the hard truths about the world we face today.
So what's the main thesis from Michael's discussion today?
The core thesis is clear. China's struggles are no longer isolated. They're sending shockwaves through the global trading system, influencing markets and economies worldwide.
Wow, that's intriguing. What about the effects of stock market behavior?
Michael reveals that historical instances like the 1987 crash show how stock market downturns directly impact commodity prices, revealing just how connected these markets really are.
And how is China faring economically right now?
It's tough to watch. China's economy is on a dangerous path, struggling with stagnation similar to what we saw in 1931. Meanwhile, their leadership seems hesitant to provide the necessary stimulus.
How do these issues in China affect other economies?
Countries that rely heavily on exports to China, like India and Vietnam, are facing major challenges as China's purchasing power diminishes, creating ripple effects across the globe.
And what predictions does Michael have for China's future?
He forecasts a grim outlook for Chinese growth, possibly dipping below 5%, which could spark the government to take drastic action to curb the decline.
To wrap up, what key takeaways can we gather from all this?
The world is watching China's economic troubles closely. With such interconnectedness, what happens in China doesn't stay in China. It sends ripples across global markets. It's a stark reminder that we must stay vigilant.
As we conclude, what are your thoughts on how global markets will fare in light of these developments?
Drop us a comment below. Let's get the conversation rolling on how you think these trends will unfold in the coming months.
Welcome to Kitco News. Today's discussion navigates the rocky waters of net zero by 2050 and why some believe it's heading straight for disaster. Joining us is energy expert Alex Epstein, ready to share eye-opening insights.
That's right. Alex argues that this ambitious climate policy could lead to a global energy crisis rather than a sustainable future. With credentials like being the author of The Moral Case for Fossil Fuels, he's here to explain why fossil fuels remain essential.
So, what's the core argument Alex presents today?
Alex asserts that focusing solely on net zero emissions overlooks vital goals like energy abundance and human flourishing. He argues that this obsession with limiting fossil fuel use could lead to dire consequences, particularly for poorer populations.
Let's break down those key points. What does Alex say about energy and human flourishing?
He stresses that without sufficient energy, many struggle to secure food and shelter. Fossil fuels, in particular, have allowed civilization to thrive by providing reliable and affordable energy.
And what about net zero itself?
Alex highlights that these policies could exacerbate energy poverty. He notes that current renewable technologies lack the reliability and scalability to replace fossil fuels effectively.
What's the current state of the energy crisis?
Alex points out that many regions, including parts of the US, are already experiencing blackouts. This underlines a failure to secure reliable energy sources before moving toward net zero goals.
So, what does Alex predict if we stick to the net zero agenda?
He envisions a global energy shortage that could cripple food security, potentially leading billions to experience declining living conditions as they lose access to reliable energy sources.
Wrapping things up, what are the big takeaways?
It's clear that fossil fuels are integral to human progress, and navigating towards net zero requires careful consideration of its effects on global energy access and individual freedoms. The goal should be energy abundance, not restriction.
How about the future of energy policies?
Moving ahead, we must focus on sustainable energy solutions without compromising access or living standards. Only then can we truly aim for a brighter future.
As always, we want to hear from you. What do you think about the path toward net zero and its implications?
Leave your comments below and join the conversation on how we balance energy needs and climate goals.
As we wrap up, these discussions illustrate a complex economic landscape with multiple challenges ahead.
Indeed, The insights shared reflect both agreement and diverging strategies on addressing the risks.
Staying informed is crucial as we navigate these turbulent financial waters.
Thank you for watching, and remember to subscribe for more financial updates.
Thanks for watching Financial Insights in Minutes for August 26th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.